Let's talk about the broader market action this afternoon. A lot of that has to do with the selling that we're seeing in tech, and really talk about the key underlying technical factors that we need to watch for the rest of this earnings season. For that, we want to bring in Katie Stockton, Fairlead Strategies founder. Katie, it's great to see you. Let's first start off with Alphabet having the worst day that we have seen in quite some time. You can see it right now trading just above $95 a share. I know you have a chart really looking at the technicals of this, $95 a share. What do you think of Google at this price?
Well, when you see a gap down, it's obviously a step back on the chart, but it's surprisingly not doing too much damage to our indicators. The indicators are designed to reduce the noise, and the indicators are actually treating this gap down as noise. You're not seeing any kind of breakdown with the gap, just given the oversold bounce that preceded it. So I would say that it could be worse, would be my takeaway. Now, if we saw Google or Alphabet and Microsoft get back above their summer lows, that would be a nice incremental positive for them. But we're viewing any kind of stabilization on the back of this as within the context of their long-term downtrend. So the bear market cycle still very much has a hold on most of the mega caps and, of course, major indices.
Katie, you mentioned Microsoft. They're down more than 7%, largely on the back of a bit of a miss on the Azure cloud growth. Let's zero in on your expectations there.
Yeah, it's really the same chart, to be honest, and it tends to maintain a fairly high positive correlation to Alphabet's chart. You'll notice there, too, a gap down, but not a breakdown. There is some support at the recent low. That is still very much intact. There's also additional longer-term support around 215 for Microsoft based on a Fibonacci retracement level. So it's not as if this decline is making the bottom drop out for these names. It's really just sort of more of the same in terms of the downtrends that have been in force year to date. And we suspect that they're actually going to recover here in the near term. And we say that more because of top-down influences as opposed to something specific to those stocks themselves. The positive seasonal influences are very prevalent at this time of year. We also came into the earnings season with this sort of deeply and widespread oversold condition. And that's why the vast majority of the reactions outside of Alphabet and Microsoft have been more positive than not. So that to us is something that could foster a greater relief rally and give us at least better selling opportunities.
Okay, we have Microsoft and Alphabet, the two big reasons why we're seeing the S&P in the red today. We have the S&P off just around 0.8% on track to snap that three-day winning streak. When you take a look at the current value of the S&P just above 3,800, where do you think we go from here?
Well, it came right up into that downtrending 50-day moving average, and that was sort of a natural place for it to take pause. That we wouldn't expect it to go up strongly every single day. It had already lifted more than 10.5% off of its recent low with this oversold bounce. So we've been calling for a few days of consolidation as of yesterday. And that's based on short-term overbought conditions, primarily, and some counter-trend signals on a very, very short-term basis. But we're looking for that consolidation to forge higher. For us, the resistance that is intact sort of initially is around 39.14. And beyond that, we're watching the downtrending 200-day moving average, which we would not be surprised to see a test of before this relief rally fully failed.
Okay, Katie, how about the currency exchange? Obviously, the U.S. dollar, the strength of it, the story for many, if not all, multinationals in Q3 without before a little bit of a pullback in recent days. What's your expectation?
Very strong long-term uptrend, of course, behind the dollar. And that uptrend still does have the support of positive long-term momentum indicators. Just look at long-term moving averages. They're all pointing higher and mostly diverging still. And yet within that context, we had noticed a few weeks ago some signs of upside exhaustion that we hadn't really seen since about April, looking at the dollar index. And those signs of exhaustion were based on the DeMark indicators. Those are designed to gauge when a trend seems to be tiring out a little bit. And that's what seems to have happened here for the dollar. We're looking for more consolidation, more of the same that we've seen recently, sort of a pullback and consolidation to basically regulate the slope of that very steep uptrend.
Can you take a look at the price of crude today? Again, getting that bump like Anos was just telling us about. A lot of that has to do with the data that we've just gotten out. But taking a look at how crude has been trading, we have it up on your screen there. When you take a look at the right-hand part of that chart, really in the month of October, we've been pretty range bound between this 85 and 95 bucks a barrel. What do you make of the prices that we're seeing today?
Yeah, it's a little short-term momentum shift to the upside. We've seen already an oversold bounce that was partially retraced, now coming out of that pullback. I do think that we'll see a relief rally unfold as well, and to a greater degree in crude oil prices, also natural gas prices. But there has been, of course, a long-term loss of upside momentum there. We've seen that with the downtrend over the past several months. And that is certainly a notable shift for crude oil. So we have to assume that this relief rally, may meet resistance a bit lower, of course, than the earlier highs of the year. We're looking for resistance to be discovered somewhere in the $96 to $97 per barrel area. But those energy stocks really don't seem to be bothered whatsoever by the downtrend that preceded this relief rally.
They do not. All right. Fairlead Strategies, Katie Stockton, always a pleasure, always learning. Appreciate your time.